U.S. stocks fell today. They're down, extending the global slump as the unexpected drop in new home sales added to concern about the economic recovery. David Chalupnik, head of equities with First American Funds, joins us for a discussion on the state of the markets as we head deeper into the fourth quarter and look forward to a new year. David, welcome. Nice to see you.
Glad to be here. Thanks, Lori.
Characterize short-term market trends. Is this a bit of a correction?
This is a bit of a correction. The S&P 500 is down about 5% over the past 2 weeks from its recent high. That's not too surprising. We've had several corrections in the tune of 3 to 7% since the March 9th low. So we're viewing this as another similar type correction.
Yet you do believe we will end the year higher with the equities markets, and we teased your S&P forecast, which is quite optimistic. So what's going to get us to that level? I believe 1150?
Yes. We do believe that the market will have a good fourth quarter here. We are going through this correction. But really, Lori, when you do look at it, the underlying fundamentals remain very positive for the market. We have had a couple weeks of weaker economic data, but when you do come out of a recession, that data is not, a straight line up. You are going to have some blips. But if you do look at all the indicators out there, they are all pointing up in terms of from an economic point of view. And then on top of that, you do have earnings that have been coming out very strong. Top line pretty much in line with consensus. Bottom line beating consensus really due to the nice cost cutting that corporate America has done. So from a fundamental point of view, the underlying fundamentals for the market look good.
All right. Critics, though, might be quick to point out here that stock valuations are inflated, that this huge run off the March 9th lows is just too far, too fast. So what do you think about valuations?
Yes, it certainly has been, quite the run since March 9th. But if you do look at the market is not overvalued. In fact, it's undervalued. If you look at a couple of the traditional measures, if it's price to book, enterprise value to sales, there's still upside to the market. Even if you look on a PE basis using consensus earnings for 2010, and those earnings estimates have been going up, the market is undervalued. So we do view there's decent value in the market and things are improving.
What sectors do you like?
Well, given our bullish outlook, we are bullish on the more cyclical sectors. The economy is healing. It is recovering. We do like consumer discretionary, which has been under pressure the past couple of weeks, as well as the technology sectors, both cyclical sectors.
But economists, yes, cyclical, but they're saying that this is not going to be a consumer-led economic recovery. So why are you still bullish on discretion?
Yeah, if you do look at it, Lori, these stocks are undervalued. They started underperforming, and earnings estimates were cut way back at the beginning of 2007. So a lot of these stocks have been under pressure, for a good couple years before they started to rebound. So their valuations, their fundamentals really deteriorated a lot more. If you do look forward, the consumer is in a weak spot relative to, where they typically are coming out of a recession. But having said that, even the recent data, chain store sales, back to school, the retail sales are actually looking a little bit better. They're not strong by any imagination, but everybody is so bearish on the consumer, and you are getting some signs of, some moderate spending by consumers, and that should help these stocks out.
And my other argument against consumer discretionary might be that unemployment could hit above 10% before the end of the year, according to some economists. And we're just learning today, Goldman Sachs is reducing its forecast for economic growth, and more people are saying GDP, which I believe we get tomorrow, is going to come in below 3%.
Yeah, that is the key. The employment trends are the key. They have been improving at a very slow pace. The initial unemployment claims have been improving. That's very important. Employment holds the key for 2010. Having said that, Lori, the stock market has rebounded sharply from the March 9th lows. Housing prices are beginning to stabilize at low levels, but the main drag is employment, and that is something that we do have to watch very closely.
All right, Dave. A lot of our viewers certainly appreciate your bullish outlook. Many thanks once again to David Chalupnik, head of equities at First American Funds.